May profits be upon you. Welcome to another weekly market forecast. In this video, we're looking at the futures, right? The futures, the S&P, the NASDAQ, the Dow, gold, silver, and oil. Okay, we're looking at the futures. Why? Why am I looking at the futures? Because it is regulated by the Chicago Mercantile Exchange. Everybody who participates in the futures are looking at the same price, the same levels. No crazy slippage, no crazy spreads. We don't have to worry about that kind of stuff because it's regulated and it's just benefits everybody. And when you're trading like what forex, when you're trading on the future, when you're trading currencies on the spot, like the Swiss or the U.S. The pound, the Aussie dollar, the euro, whatever. All right, you're trading against the U.S. dollar automatically. You're trading when you're trading on the spot market. You're going to be trading against the U.S. dollar. So you're now looking at pound USD anyway. You're looking at Aussie dollar USD. You're looking at uh, Euro USD and so forth. All right, everyone is already versus the US dollar. All right, so just something to bear in mind. Anyway, let's look at the week ahead. The week ahead, I'm looking at Monday, Tuesday, and Wednesday as my days to trade. Why? Because there's a lot of good volatility there. All right, you do have a Bank of Canada interest rate decision to make over there on Wednesday, but Monday through Wednesday, good volatility in the markets. Thursday, not as much, even though you see unemployment numbers and all that stuff. I'm not saying don't trade that day. I'm saying that this day may see some consolidation. Why? Because Friday, you're going to see non-farm payroll go out. NFP is a big market mover, and it has the potential to reverse the market. All right, reverse sentiment. So it's high impact. What you want to do is you want to wait until after the news of NFP on Friday, then trade for that day. Trade your session, but wait until after the news. You can fade the move. It's easier. It's easier to trade. All right, and safer. Now let's look at the S&P first. All right, we're looking at the daily, and what I want you to see. Actually, let's look at the weekly. What I want you to see is price was bearish for weeks, right? And then we see no resurgence after Trump and his and the tariffs and all. We started to see price recover from that earlier push to the downside, and we have a break above that swing high here, a weekly swing high. It closed above, and then for the next couple of weeks, it's kind of been moving sideways. But what I want you to notice on this is that there was a small weekly fair value gap between this low and this high. There was a weekly fair value gap, and price could use that potentially. That have price come back to the weekly fair value gap and seek higher prices from it. Yeah, that could happen. All right, but I am bullish in my sentiment on in this market. Now, if we go to the daily, uh, you can see that weekly fair value gap is a little more obvious here. All right, price came down to it, pow, and pushed up. All right, and that's pretty good stuff. But you can also see that there was a a daily fair value gap that price pushed into. All right, did not close below. All right, and price moved up, creating another daily fair value gap, which price used and respected up until Friday. So far it's looking like we may see some follow through. So that has me feeling bullish on this market. All right, now the only way I will change my sentiment in this market is if price takes out this low. All right. Why? Because this would be a market structure shift to the downside, a bearish market structure shift, and it'd probably be to fill this volume imbalance here. All right. This price gap. All right. Probably be filling that. And then I would be thinking to look at, are we creating bearish fair value gaps along the way that price could use to go lower? All right. So That's not here. I'm not there yet. Until this low is broken, that's when I will start thinking that way. Right now, I'm thinking that we may see higher prices from current levels. Okay. Now, if we look at the NASDAQ, I'm feeling the exact same way. And I want to show you something. We got the same situation here. Volume imbalance here. So let me just highlight them. Volume imbalance here. We have the a weekly fair value gap that price used to push higher. All of that's great. All right. Same thing as what we just saw in the S&P. Here's the deal. Do I have that right? Yeah. This low to that high, that's what I want you to pay attention to. That is a new high there. We have the retracement. This is the impulsive move. This is the correction. And where are we correcting at? Right at the golden ratio, 618. I like that. I'm thinking that price has the potential to find support there. All right. Not to mention that there is an order block here, just like on the S&P. We could use that for support for higher prices. Okay. I want you to see it in the S&P as well. Order block here. Price comes back into it. We could use that for higher prices. This is the impulse correction and impulse move. Do we have the exact same thing going on in the Dow? Oh yeah. Oh yeah. Uh, Clear that up. You could see the volume imbalance here. You could see that there was a weekly fair value gap here that was used. Price pushed higher from it, creating this order block. And we come back to that order block, and it looks like we may see higher prices from it. I'm looking for prices to take out the buy side liquidity, and I believe that's going to be the draw up here, just like with the S&P. I'm thinking that this will be our draw on liquidity, and that's the NASDAQ, and here's the S&P. I'm thinking this will be our buy side draw on liquidity, and we have some descending highs up here that should bring prices even higher. All right. Now let's go to gold. Gold's a little something, a little devil. You little devil. All right. I am bullish in this market because it's kind of resembling the S&P in them. Why? What's making it resemble it? Well, look at this. We have this push down and then a stronger move to the upside, creating a weekly order block here. Price comes back into that order block and gives a wick of respect thus far. But this is how last week closed. It was bearish, a bearish week. But you see the wick of respect there. It almost closed as it almost closed halfway. Throughout the what do you call the range of that candle. It almost went to the 50%. Let's go to the daily. Let's get a closer look. All right, and what I want you to see is look how price moved. All right, we created this area. Why is it super duper speed right now? All right, we created this area of fair value. Price moved away from it again with this thing. I don't know what's happening. And now it looks regular. All right, let's try that again. All right, yeah. So I'm looking at this. All right, fair value gap. An area of fair value. Price moves into it. You wait for price to come back to those areas of fair value. Just missed here, pushed higher anyway, and then came back into it. I'm looking for this to hold as support for higher prices. And so far, it looks like it may be doing just that. All right. I am bullish in gold. All right. I want you to also notice that we have a daily fair value gap that was used, so it's not used anymore. All right. We used that daily fair value gap here for higher prices. It served its purpose. Then we come back further to take out the sell side liquidity on these lows. All right. Took it all out. And then we had this wick of respect. Why? Because we come down here where we find a change in the state of delivery, right? And price bounced from there, all right, and pushed higher. Last on Friday, we did not take this low. If we take this low, all right, I'll be looking at it as a shift in the market from bullish to bearish, and I would start to think that we may be heading towards these ascending lows here and descending lows here, and this this low would become vulnerable to me. But until that happens, I am bullish. All right. Until this low fails, I'll be looking for a price to continue higher from this area. Now, can we go down to a lower time frame to see if there's any support for higher prices there? What I want you to see is this. All right. You can see that the market did come down, making lower lows and lower highs. Boom. Took that sell side liquidity there. Fine. We come down into the change in the state of delivery and had that wick of respect that I had pointed out a few minutes ago. Price pushed up higher and took out this high. That is key. I believe this is where the market turned bullish. All right. And I would have loved a close or candle body close above that high, above this high here. But the fact of the matter is that we came all the way up and took out that high. Now we have a retracement and we have a bullish candle here. I'm looking for this bullish candle to hold and continue with higher prices. Why? Look where we're at. 618 again. We're at the golden ratio. If I don't point it out enough, I'm pointing it out right now. All right. We pulled back to it. And to that fib level, I'm looking for price to find its footing to head up towards these highs here. I can't draw straight lines for some reason. All right. And we'll see. If we take out this low, then I'll be thinking that my sentiment will be to look for sells. Right now, I'm looking for buys until this low is taken. All right. That low is at 3,269. 3,269. Okay. If we go to silver, silver is more bearish than gold. It's a little weaker than gold, and it's moving to the side. I don't want to play in this at all. At all. Wait for a breakout. All right. You see this move here? Price pushed up higher, left a fair value gap. Price came in that fair value gap, and we've been moving sideways ever since. All right. What I would like to see, what I would prefer to see, is a sweep of these lows here. Come on, man. Why would you do that in front of company? A sweep of these lows. I would love to see a sweep of these lows and then a move higher. Price could come down to these lows for sure, but it swept these lows already. It swept down here already, and we haven't had a sweep up top. I'm looking for one sweep to make that move. You understand? So that's what I'm looking for, but I'm not gonna. I can tell you right now, if I'm going to trade in metal, I'm not going to trade silver. I'm going to trade gold. If we're going higher, you know what I mean? All right. Now, last one. Looking at oil. All right. If we go to oil, WTI crude. Let's go to the weekly. What do you see? We've been moving sideways. Hasn't been the easiest market to trade, especially around this time. All right. We finally get a breakout. We got a high being swept and traded through, and then we come down and sweep these lows. I like it. Now, do I think we're going higher or lower? Look at this leg. This is a bearish leg of market structure. All right. We went to the top and then swept the lows at the bottom. All right. We didn't sweep this swing low, though. All right. That's something different. If we sweep these lows and this low, that is when I would be safest. I would feel safer to look for a market structure shift to the upside where I can start taking higher, looking for prices to go higher. All right. Right now, we've been kind of thrashing about to the side, and I'm not in love with that. Look how the last few weeks have been sideways. We're not taking out the low. We're not taking out the highs. All right. But we do have this area of fair value up top, and a sweep of these highs would tap into that, and then we could look for market structure to shift bearish or bullish from there, because this is an untouched area of supply. All right. And uh, that's attractive. All right. If we go to the daily, come on, man. All right. If we go to the daily, you can see it's not been an easy road to take, especially over the last couple of weeks. All right. Just sideways action. I want to see this consolidation. I want to see that consolidation broken. I want to see a breakout. I would love to see a sweep of the high, and then I could look for a market structure shift. And when price pulls back into that market structure shift to the downside, I can take a trade to these lows. That's what I want. That's what that would get me involved in this market. But for right now, my sentiment is bullish until there is a market structure shift to the upside with some fair value gaps. All right, if I start to see fair value gaps on the way up, and then we break structure to the upside, then I'm start thinking that we're bullish. But right now, this is a lower low, this is a lower high, this is a lower low. I'm looking for the next lower high. The lower high comes after this low is broken. All right, that's until that low is broken here, that doesn't become a lower high. All right, it has to lead to a lower low. A lower low is only made by a lower high. So if there's no lower low, then there's no lower high. We're moving sideways, so I'm waiting for that. Okay. I hope you found this helpful. Just make sure you're waiting for your confirmations. All right, for your sentiment, for your bias. I want, if I'm a bearish bias, I'm looking for confirmation of a market structure shift to the downside. All right, then I can put when price pulls back to that inside of that bearish leg. This trade here becomes a high probability trade to the downside, and vice versa. If I'm looking for a higher high to be made, and the higher high is made, I'm waiting for price to come back to that breakout area here and inside of this bullish leg to take a high probability trade to the upside. You understand? That's it. I will see you in the next video. Thank you for watching, and may profits be upon you.